Welcome back to the channel where we focus on rebuilding and scaling your business even when the odds seem stacked against you. Today, we are discussing a topic that is often shrouded in shame but is actually a vital part of many successful entrepreneurs' stories, which is how to get a business credit card after bankruptcy in 2026. Whether you filed for Chapter 7 or Chapter 13, a bankruptcy is not the end of your financial life, but rather a difficult transition that can lead to a more stable and educated future. In the current economy, the way banks and fintech companies view bankruptcy has changed significantly, and they are now more interested in what you have done since your discharge than what happened in your past. In this 10-minute deep dive, we are going to explore the exact roadmap to getting approved for credit lines again, and we will identify the specific banks that are known for being bankruptcy friendly this year. We will also talk about the psychological shift you need to make to go from a state of financial recovery to a state of business growth. Before we get into the cards, we need to talk about the preparation phase, because you cannot simply jump into applications the day after your discharge and expect a different result. Let us begin with the foundation of your recovery. The first thing you must do after your bankruptcy is discharge is to verify that your credit report is accurate, because many lenders and collection agencies fail to update their records. You need to ensure that every debt that was included in your bankruptcy is now showing on zero balance and is marked as included in bankruptcy. If these accounts still show as active or past due, it will destroy your chances of getting any new business credit. In 2026, we have incredible AI tools that can help you scan your reports and dispute these errors automatically, but you must be proactive. Once your reports are clean, the second step is to establish your business as a completely separate entity. If you are running a business during your bankruptcy, you should consider starting a fresh look with a new line to create a clear line of demarcation between the old troubled company and the new one. This gives you a clean slate in the eyes of many modern lenders who use automated systems to check for business history. You also need a dedicated business bank account and a professional business address, because these are the baseline requirements that every bank will look for when you apply for credit. Now let us move into the actual cards, and the first category we must discuss is the secured business credit card. This is the most powerful tool for someone post-bankruptcy, because it removes the risk for the bank while allowing you to build a new record of on-time payments. At the top of our list for 2026 is the Bank of America Business Advantage Unlimited Cash Rewards Secured Card. Bank of America has historically been more open to working with individuals after a bankruptcy, provided that the bankruptcy was not against them specifically. You will need a deposit of at least $1,000, and in return you get a professional card that reports to all the major business bureaus. The secret here is that if you maintain a healthy balance in your Bank of America business checking account, their internal scoring system may overlook a personal bankruptcy much sooner than a cold algorithm would. They are looking for a new pattern of stability, and this card is the perfect way to provide that. Our second recommendation for rebuilding is the Wells Fargo Business Secured Credit Card. Wells Fargo has streamlined their bankruptcy review process in 2026, and they are now looking for a minimum of 2 years since your discharge date for unsecured products, but their secured card is often available much sooner. They allow deposits up to $25,000, which is excellent if you have recovered some cash and need a high limit to run your business operations. Like Bank of America, they report to the business bureaus, which helps you build that all-important credit score with Dun & Bradstreet. Remember that the goal of these secured cards is graduation, so you should be looking to get your deposit back within 12 to 18 months of perfect payment history. The third card on our list is a bit of a hidden gem in 2026. which is the First National Bank of Omaha Business Edition secured MasterCard. This bank is known for being very pragmatic, and they understand that many great businesses are born from the ashes of a previous failure. They offer a very simple application, and their customer service is top tier for small business owners. At number 4, we have the NEV Prime card, which we have mentioned before, but it is particularly relevant for the post-bankruptcy founder, since NEV does not perform a hard credit pull and does not have a traditional underwriting process. It is virtually guaranteed that you can get this card as long as you have an active business and a bank account. It reports as a trade line, which is exactly what your thin business credit file needs to start growing again. Now let us talk about the fourth and perhaps most exciting category, which is the revenue-based fintech cards like Ramp and Brex. In 2026, these companies have moved even further away from personal credit scores. If your new business is already generating revenue, or if you have a significant amount of cash in the bank, these companies often do not care about your personal bankruptcy at all. They focus on your real-time cash flow and your business bank balance to determine your creditworthiness. Ramp in particular has an incredibly fast approval process that uses open banking to see your actual performance. If you can show that you are making money and managing it well, Ramp will issue you a corporate card with no personal guarantee required. This is the ultimate goal for anyone post-bankruptcy, because it completely isolates your business finances from your personal credit history. Another strategy that is highly effective in 2026 is building relationships with local credit unions. While the big national banks are ruled by rigid algorithms, credit unions are run by people who often have the discretion to look at your entire situation. If you walk into a local credit union and explain that you have had a bankruptcy but have since built a profitable new look, they may be willing to offer you a small credit line or a secured card to help you get back on your feet. They value the relationship and the local economic impact of your business more than a score on a screen. This personal touch is often the fastest way to get an unsecured card after a bankruptcy, if you can prove your business is viable. As you move through this process, you must be extremely disciplined with your spending, because a second bankruptcy is not an option if you want to remain in business. You should treat your new credit lines with the utmost respect and never carry a balance that you cannot pay off in full every month. In 2026, the interest rates are still high enough that carrying debt will eat your profit margins alive. You should also consider using credit monitoring service to keep a close eye on your progress and to see exactly when your score has improved enough to apply for the next tier of cards. Usually once you hit a score of 620 to 650, you can start looking at cards from Capital One or even American Express again, depending on which lenders were included in your original filing. It is also important to mention that you should avoid the predatory lenders that specifically target people with bad credit or bankruptcies. These companies often charge massive hidden fees and extremely high interest rates that will only hurt your business in the long run. If a card sounds too good to be true, or if they are asking for a large upfront fee that is not a security deposit, you should walk away. Stick with the reputable names we have discussed today and focus on slow and steady growth rather than a quick fix. Your reputation as a business owner is built over years of consistent behavior, and the financial world will eventually